In this video, I'll be taking you through how one of our Facebook members got 5 properties in 12 months, completely setting him up for life, for a passive income, for early retirement. This video is going to open up the curtains, will expose what real property investors are doing right now, how they are building wealth. This is not like any spruiking, this is the real deal. This is one of my clients, one from the Facebook group, and I'll be taking you through his exact deals, his exact numbers, his exact properties. And the production quality and audio quality may not be great because I am traveling around South Asia, so forgive me for that. But the actual quality of the content, what you'll hear, will go through the properties, will go through, more importantly, how he got them, tips and tricks, so that you can replicate his success. Stick with me right till the end. Let's go. So 5 properties in 12 months. First one, $100,000 capital growth in 12 months. So this is obviously the one he bought 12 months ago. So he bought it off market, hence the crappy photos. I'll show you these photos in a second, but I just want to expose what this means. So off market means it's not listed on realestate.com or Domain. You can get this yourself. You don't have to go through a buyer's agent. He got it off market before it hit the open market. So therefore there's no competition. All you have to do is call some agents, top agents in the suburb you selected, maybe once or twice a week. It's like 15-20 minutes of time. I've done other videos on how you can do that, but seriously, he has done it himself. 7.6% plus yield to withstand interest rates. I won't labor the subject, okay, but if you're not investing right now because of interest rates, well, if you can get close to 8% properties, doesn't matter if interest rates go up even another percent, which I don't think they will, but they are paying for themselves. There is a 0 vacancy rate here, guys. So, I mean, this is not a typo. The vacancy rate is literally 0. What does that mean? That means that as soon as a property goes on the rental market, it's snapped up literally within a day. That's what 0 means. So that means rents are going, it's all I can guarantee my reputation on this. Rents are going to rise every single 6 months or year or 2 years because there's a chronic lack of rental supply. That is further going to withstand or offset any future interest rate rises, and capital growth will occur. He had 0 confidence before this, and now he is fully confident. Okay, he's bought interstate without a buyer's agent, and by doing it himself across 5 properties, he saved himself $15,000 per property, $75,000 in buyer's agent fees. That is in fact how he was able to get to that 4th and 5th property, because he was able to keep his own money in his own pocket, not give it to a buyer's agent. All right, so the purchase price for this first one, okay, these aren't, like this first one especially, is not an expensive property. Okay, $250,000. He needed less than $40,000 to start. So, for, it's an age-old question: how much money do I need to start in property investing? Look, he got under $40,000. Let's be conservative and say about 50 to 60. But you don't need to be a millionaire. The rent per week is $370. Okay, so just because it's high yield, does that mean we need to trade off against growth? Absolutely not. Good growth factors. Okay, I've done other videos on the different factors that we look at. 30 to 35 really strong data factors, not just one random score or one random factor. It is triangulated. Like I said, 0 vacancy rate, quality, solid brick home. Is not some sort of, beaten down shack. He bought this interstate, okay, in Queensland. He doesn't live in Queensland. He bought in Queensland. Didn't catch a single flight. Had all the local due diligence done for him. Okay, so a lot of people ask, well, how does that happen? Well, you just use a local property manager. I give property managers. I've also done videos on how you can find your own property managers. You can just call them. They will do inspections free of cost. The exact same thing that buyer's agents do, but for free. They do it. Obviously, good and bad people in any industry. Find the good ones, the ones that won't lie to you. They do it for free. Most property investors that buy interstate actually do it this way these days without a buyer's agent. And he's clearly self-sufficient to rinse and repeat, because he's bought 5 properties now and he's building a passive income. So it's just really a lot of information online. It's really easy to make mistakes. My marketing, you could say, or my sort of mantra is that data does not lie. And with data and a little bit of help, look, a lot of you might not need mentoring or education, and that's fine. Go ahead and do it. But with a little bit of support and guidance, it's amazing what you can achieve. You don't need to give the keys to someone else of your financial future. Don't become dependent on some company for every purchase. Okay, it's good to be self-reliant. No one cares about your money as much as you do, because yes, buyer's agents can charge you $15,000, or you can buy a cheap $2,000 or $3,000 course from a buyer's agent only to upsell into their full service. But the truth is, there's no way to verify what they are bringing you unless you know what you're doing, unless you know property investing yourself. So this is the property, as you can see. Okay, so really nice, it's a really nice brick property. It's something that's just going to last for the next 40, 50 years. Really low maintenance, going to be a cash cow as it already is, and the data suggesting that capital growth will be fantastic. Let's go to the second one. So this one is $65,000 or 90% capital growth in 10 months. Okay, now keep in mind, like this is during the interest rate rise period as well. 6.5% yield. Rents are going to rise $2,000 to $3,000 in the next 6 months. How do I know this? It's because of it's because of different data factors like historic rental growth, vacancy rate, the amount of inventory that's available in that market for resale and rent. That's how we can predict how much rent will grow. And if rent's going to grow by $3,000, and I'm not making this up, 6 months, then who cares about interest rates? Granny flat is actually already included. Okay, that's why the yield is so good in this one. Okay, let's go through the numbers real quick. So $335,000 purchase price, funds required $50,000, rent $420 a week, vacancy rate 0.17, good large block size 665 square meters, solid brick. And he bought this one in South Australia, so he's diversifying. And if I skip down, really nice property. You can see even in the inside, the exposed brick, beautiful look, entertaining area. It's just there's nothing not to like about this one. Okay, I'm going to give you some tips and tricks as I go through. Okay, so this one, third property, is off market. Once again, not on real estate or domain. You can do this yourself. You don't need to rely on an expert. Once again, rents will rise by $2,000 to $3,000. And a really good way to assess this, guys, like if you're worried about not getting a tenant, you're worried about rent, talk to 3 property managers. Like in the suburb, once you've selected your suburb, call up the property managers and be like, hey, how many properties are listed? How quickly are they getting rented? Are rents rising on a monthly basis? For example, in Perth right now, CoreLogic is suggesting that every month rents are rising by $10. Okay, so let's say you have a 12-month lease, like it's I mean, I don't know how long this is going to go for, but $120 rent rise for the next 12 months. Like that's phenomenal. I don't think we've ever been in such a situation in Australia. What's really good about this property is it's walking distance to the school and shopping mall. But I really want to emphasize that just because a property is walking distance to a school and shopping mall, that doesn't mean that it's worth buying. There's plenty of dud properties within walking distance to school and shopping mall as well. It's the underlying data, it's location selection and then property selection that matters. Location selection, i.e. the suburb that does the heavy lifting, and then these things are really cool. And you can find them out by just going online, right? And using a local property manager. You don't actually need to be on the ground. You don't need to, smell the coffee at the local cafe or anything like that. So this one is a little bit more expensive, $421,000. He needed under $80,000 according to his LVR for this one. He negotiated $7,500 post-building and pest inspection. You might be wondering, how does that work? Real quick, once you have got that property under contract, okay, it's in the conditional period, you get a building and pest inspector done. And what the pest inspector does is that they check if there's any cracks, any structural damage to the property, and if there is anything at all, they tell you in a report, and you phone them up. And most of the times, a report is like really complex. They will say, "Hey, PK, there's like this small thing, that small thing wrong with it. It might be costing $2,000." You can go back to the agent and be like, "Hey, that's going to cost me like $10,000 to fix." And then there'll be some like argy-bargy, some negotiation. In this case, Ray was able to get this down by $7,500. This does not cost him $7,500 to fix these items, probably like $1,000 or $2,000. So there's an arbitrage of almost $5,000 or more of further negotiation done in the conditional period. So if you're not negotiating in the conditional period and you think negotiation is all about pre-contract signature, you got it all wrong. Okay, rent $430, really strong data, solid brick 0.25 or 0.24 vacancy rate. This is again in Queensland. Once again, land taxes, the additional land tax thing is not going ahead in Queensland, so we're all good to buy in Queensland. Again, I was always for it, even if the land tax was there, but it's an extra bonus for the Queensland property market. Okay, check this one out. Really, really nice property, polished floorboards, a nice exhaust for the kitchen, beautiful deck. Something like this, a deck at the back like this might cost, a couple of $1,000s to put in or a few $1,000s to put in, depending on the quality. And it gets you another $50, $100, sometimes even $150 extra in week per rent. So really consider it, nice. This house could do with a bit of rendering, a bit of landscaping, but tenants don't really care about that. From a rental perspective, it's amazing. And the next one, this is his fourth property, 6.9% yield in Australia's fastest growing market. There's a buyer's agent right here on YouTube that's been poo-pooing Townsville and recently changed their mind because everyone else has bought in Townsville and they've made so much money. I'm talking about Townsville right here. Rents here in this particular suburb, always markets within markets, will rise once again, $2,000 to $5,000 in the next 12 months. Really low maintenance. We don't, just because a property is old, that doesn't mean that maintenance is going to be high. These property marketing companies, they try to sell you a brand new property saying, oh, it's easy to get tenants and lower maintenance. That's really not true. In fact, the types of properties that are built in the 70s, 80s, really better quality than the type of properties that are built these days. So as long as you factor in like $1,000 to $2,000 of maintenance costs, you can buy an established property that 9 times out of 10 will grow better or faster or more acutely than a house and land package in the sticks or in the suburbs that are on the fringe parts of CBDs. Okay, this is in Townsville, like I said, a free giveaway, purchase price $309,000, total funds required less than 50, rent $415, pays for itself basically, 0.23% vacancy rate. You can see all the vacancy rates that we're buying are like, under 0.5%. Basically, another Queensland property, didn't catch a flight, all the due diligence done for him, didn't need to pay a buyer's agent or anything like that. I mean, would you live in this property? A lot of you would. A lot of you maybe would say, look, I probably don't want to live in that property. Doesn't matter. It's all about the numbers. Don't buy a property based on whether you would want to live in there or not. Okay, it's all based on whether someone else wants to live in there or not. And, the mistake that a lot of people make is to say, who on earth is going to rent a property in Townsville? Like, doesn't everyone want to rent in Sydney, like in Parramatta or Central Sydney or Melbourne or Brisbane? That's wrong. It's dead wrong. Regional Australia has always had a strong rental market, always will have a strong rental market. It's just about finding those pockets. And it's not that people in rural or country or regional Australia, not that Townsville is really regional anyway, it's not that these people are not well off, or it's not that these people trash the place, or there's no employment. It's got to be further from the truth, and through education you can find these opportunities. And the last one I want to share with you today, his fifth one, and he's actually buying another one, so like maybe in a couple of months I'll do his sixth property in 12 or 13 months. But this is 5.8% yield with bonus tax benefits. Okay, so once again, rents are going to rise, as you can see, common theme. This is a 2005 built, so there's huge tax benefits. Now, I'm going to pause here and I want to teach you something real quick. People buy brand new house and land packages or off-the-plan apartments because they're brand new and they've heard from their friends or parents or colleagues that they will get huge tax benefits. It's true that you will get huge tax benefits if you buy a house and land package because it's huge depreciation on it. Always remember that land appreciates, buildings depreciate. Okay, so if you have a really small land component like 300 square meters or less than 400 square meters, okay, yes, you're going to get the tax benefits, but your thing isn't going to grow as much as a house with a larger land component or block size. What we want is something with tax benefits, okay, for those of you who are high income earners, we can still get high tax benefits without compromising capital growth. And that is through established properties that are built in this type of time period. 4 bedrooms and walking distance to the primary school. Overall, now he saved $75,000 in buyer's agent fees. Is it a good time to buy a property? Yes, I'm buying a property, but only if you know where and how to buy. This is not the time to be buying property in Australia with a blindfold on because it's not 2021 and it's not 2020. Okay, we're not at the start of this huge unprecedented boom anymore. You will still get double-digit growth rates, okay, for the next few years, but now you need to be more clinical. So is it the right time to buy? Yes, but it matters where, not necessarily when. Purchase price $448, total funds required less than 80, $500 a week in rent. Really, really strong. What I love about this data is not like we've just taken 2 or 3 or 4 data points. Like, write this down. Days on market, stock on market, job advertisements, building approvals, council pipelines, infrastructure, build, inventory levels, etc., etc. When you corroborate and understand a multi-dimensional view of data, then you can paint a picture that has multiple gradients and really understand and ascertain which suburb, which location, which property is going to do really well. Brick, good vacancy rate. This one's in WA, so you can see he's diversified across WA, South Australia, and Queensland across his 5 properties. And here it is. Okay, so this is something that a lot of you may want to live in. It's a nice property. Your really big backyard, green. This is the type of property we'd love to buy, but not if it's in shady parts of Ipswich, not if it's in parts of, shady parts of Logan. The picture is great, but you know what? What makes a property go up, what builds passive income, what gets you out of the rat race is not how good this property looks, even though this one looks good, it's where it's located. In this suburb or this pocket, of Perth is just booming, booming, booming. Even though CoreLogic will say Perth is flattening out in terms of capital growth, always markets within markets. There are suburbs in Perth that are falling right now, believe it or not. There are suburbs that are experiencing double-digit growth, and there are suburbs that are flatlining. Always markets within markets. Is this a good time to buy? Yes. Ray started his journey 12 months ago. Okay, Ray started his journey 12 months ago. He's bought 5 properties now. Amazing, amazing result. And 12 months ago, people were not buying property, a lot of them, because they were thinking, it's not the right time to buy property. Property market's about to crash. We're in the middle of a boom. It's about to pop. Every single year, people ask this question, and those who exit the rat race are the ones who take action and buy anyway, but are educated, whether through free sources or paid sources. But education is power. The 6 inches between your 2 ears are the most valuable real estate you will ever own. Please, guys, invest in that real estate, and you will get to results like Ray. In 10 years' time, this $2-3 million portfolio is going to be worth $5, $6, maybe $7 million. He can sell a couple of properties, retire debt, and just retire peacefully, debt-free. We're not talking Lamborghini money here, right? We're talking good, close to 6-figure passive income. Give it another 20 years. There you go. That's when you have close to 150, maybe even more, $1,000 of passive income, and you can just live stress-free. That's what it's all about, spending time with the family. Guys, if this brought you value, hit the subscribe button, turn the notification bell on. Sorry you didn't see me in this video. I am not in a location where I can put my video on. I am traveling right now. Thank you for bearing with me. As always, I'm so appreciative of my community. Hit the subscribe button and share it. Thank you so much. Catch you next time. Bye.